Hey guys, Mike Healy here. Thank you again for joining me on another podcast of the Cloud Investing Podcast that I am the host. I am so excited to have my special guest. I've been trying to pin Travis Flaherty down for quite some time now, pretty much since I launched this, because Travis is actually the reason I'm involved in this vertical to begin with. Travis and I have known each other. Geez, I think we're going on about 18, almost 20 years now. We've never really worked together on many major projects. We're just familiar with each other in business. And I'm excited to have him on here. Travis, thank you for jumping on here, buddy.
Mr. Healy, it is great to be here. It's a beautiful day, and I'm excited to be on the show today.
Absolutely. So before we go in, because a lot of people, if you're familiar or if you're new to the podcast, what we're doing is we're primarily talking about the investment opportunity, just to, maybe not investments, because we're not investment advisors. I got a disclaimer running on here. We're not giving financial advice, any of that stuff. This is just us having a conversation about something we were pretty excited about and found out about, because this is where the trend is everybody's moving towards the ownership of data centers. We figured out a company that is allowing us to get into what we would call fractionalized ownership of units within the big giant data centers, which is amazing. And before we get into some of that detail, Travis, you made a phone call to me 3 years ago. No, I'm sorry, it wasn't a phone call. It was a Facebook Messenger audio. And you had the message that you said, and I'll summarize your 1.5, 2 minute message. You asked me, hey, Mike, what are you doing with your money? And I thought that was a really, really an amazing way that you asked me to take a look at. We were looking at a different project because I knew you were investing in different things. And you can go ahead and mention like where you have been with your investment portfolios. Like, what have you looked at? What have you been doing? And then you kind of made the same phone call to me again about this new project. I mean, the last phone call, even though I blew you off for about 90 days,
You did.
multiple times, when you left that audio message, it tripped my trigger. And then I got information. So when you said that about this project, I listened on the first stint, which was kind of cool. So Travis, why don't you give us a little background on yourself, and then we'll go into this in more detail.
Well, first a little bit about me. Married, 6 kids, 3 grandkids, 1 grandkid with 2 more on the way. Love digital entrepreneurship. I've been an entrepreneur for the last 25 years. I'm passionate about teaching people the importance of acquiring income producing assets, especially in this new world economy that we live in. Income producing assets can be anything that generates revenue that is a residual revenue, right? I believe that residual income is the key to getting back that time freedom, being able to do the things that you want to do rather than the things that you have to do. And Mike, I think that especially in this economy that we're in today, income producing assets are key. It's no longer enough to just try and save money. When I was a little boy, my grandpa used to always say, the best way to double your money is to take that dollar bill, fold it in half, and put it back into your pocket. And I think that there's some wisdom there still today. However, the challenge is with the inflationary times that we're living in, prices of everything are going up so quickly that your value of your dollar is just going down and down and down. I mean, it doesn't take long. You go to the grocery store and spend $100 and tell me how much food that you have in your basket these days. And so, we've got some significant challenges. Old ways won't open new doors. And in the old days, it used to be save for a rainy day, save for retirement. Um, over the last few years, I've had an awakening, and that awakening, and it kind of goes along with, the message that I left you is, we go and we put our money into the banks. We deposit that money. I think that there's this big misconception that, they take that money, they go put it in a vault somewhere, and it just sits on a shelf until we need it. The reality is, it's not how it works. We have a fractional banking reserve system here that allows the banks to now invest up to 98% of the deposits. And so what's happening is these banks are taking your money and they're investing it, and they're getting wealthy at your expense. And I say that because they're using your money to make fortunes, but at the same time they're working in conjunction with the Federal Reserve, who they continue to circulate more and more money, and it drives the value of your dollar down. And so, these banks have been getting wealthy for years. And so the awakening that I had that led to the conversation that ultimately you and I ended up having with that message that I left you is, hey, listen, what are you doing with your money? Because it's critical today to find income producing assets or vehicles that are going to generate revenue. And that's what's led us to where we are today in this cloud hosting conversation. It's what led us to some of the previous discussions that we've had about other income producing asset opportunities. I look at and I believe in having a well diversified portfolio. I'm a big decentralized fan. I'm big into tangibility, things like silver and gold to be able to store value. But I'll tell you, right now, I'm not buying Bitcoin when it's sitting close to an all-time high. Right now, I'm not necessarily. I like silver and gold from a stored value standpoint, but I don't necessarily look at them as huge ROI vehicles. So for me, it's kind of if not this, then what type of scenario? And I believe that this data space is presenting new opportunities in front of significant growth when it comes to those vehicles. And so that's why I'm excited to be here.
And that was a perfect segue into exactly what we're leading into. Like on a bunch of the podcasts that I've done so far, I kind of mentioned my introduction of even the concept of this was the cash flow quadrant, which was Robert Kiyosaki's second book, about the ESBNI, employee, self-employed, business owner, and investor. And I've typically stayed predominantly in the business owner side. Like I've always tried to do that. But then I never really, I don't know if it was just because I was so busy pushing to get a business going that I never really understood the whole investor side of it, or maybe I was intimidated by it until I started looking at the first thing that I kind of looked at was the digital space with the crypto nodes that we were doing, which are still to this day producing assets every single day, which is amazing. But then you move into where we are today with data centers. And I don't think people really truly can grasp the magnitude of where this space is, because I've been a huge fan of the decentralized stuff with the crypto, but everything's running on crypto itself is running on the data and the cloud stuff that has to be pushed on these data centers. So it's like, let's get in front of the money And where do you see from your because obviously it's fairly new and we've really dove into this probably over the last 8 to 10 months now. Where do you see this going as far as future for not only for yourself but for people that maybe get involved in this space?
Well, first, I want to say I resonate with exactly what you were saying as it relates to being an entrepreneur. Getting into that quadrant was the main focal point for me for 2 decades and generating revenue. But here's the thing, and I know that you'll appreciate this, Mike. It's one thing to make money, it's entirely a different scenario when it comes to keeping your money. And for the longest time, I really focused on making money. But the reality was is I wasn't putting that money that I was making to work. And as a result of that money, the saying, money comes and money goes. And, I'm very, very talented when it comes to spending money. And so, once you start making money, you start asking yourself different questions. All of a sudden, for the first time, you start, now that you have money, it's like, well, what do I do with this? And how do I keep it? And that's ultimately what led us to where we are today. The data center industry, you're right, it's unfathomable to truly understand how big this data space really is. First of all, data is a precious thing, and it will actually last longer than the systems themselves. The demand for data is it's crazy when you think about that 90% of the world's data was created just in the last 24 months. I remember, Mike, going to Apple. It wasn't that long ago. I mean, maybe 5 or 6 years ago when I was buying iPhones that, they had 32 gigabytes and 64 gigabyte options. And then the next year it was 64 and 128 gigabytes. The next year it was 356 gigabytes. And then, and I remember thinking, gosh, who's going to use 356 gigabytes? And then it went to 500 and whatever. And now it's 1 terabyte, 2 terabyte. I have 2 terabytes and I'm at 80% capacity. Why? Because we take all these pictures, we record all these precious moments, and we continue to download apps and we continue to use more and more data storage. And it's everywhere around us. I use Zoom on a regular basis, and Zoom is telling me that my Zoom is almost full and I need to buy more data. My daughter came to me just this week saying, Dad, can I expand my data because my storage is full? I've got my Ring camera, around my property recording saying I need to buy more storage. I've got Dropbox telling me that I'm out of room and I need more storage. So when you really start to think about how everything has moved to the storage, to the data space, it's everything and everywhere. You start to be, understand the demand for it. And it's the reason why these billionaires like Zuckerberg and Bezos and them, already years ago knew where it was going, right? They subscribed to a success formula that I subscribe to as well, which is figure out where people are going and get there faster. That's how you make fortunes. And they knew that's where the world was going. And so they just got ahead of the curve and they started building these data centers. And, these three main companies that are out there control 80% of the market right now.
Speaking of which, I pulled a clip of somebody shared this morning in one of our Telegram chats that was on the news. I'm going to put this on here real quick and play it. It's 1 minute long, but if I'm not mistaken, BlackRock is probably the largest asset holder in the planet, right? Like they pretty much own just about everything. And this is one of their guys. And let me play this real quick.
Here at Post 9 is Blackstone Real Estate Global Co-Head Nadine Minji. It's great to have you back. Thanks for coming in. We should point out not all real estate's the same, but data centers, are they the most interesting silo at the moment?
Yeah, well, thanks for having me on, Carl. It's interesting. When we look at our global business today, not just within real estate, but across the entire firm, we see data centers as the most exciting asset class. Through BREIT, as well as some other vehicles. Today, we own a business, QTS Data Centers, which is the fastest growing data center business in the world. And if you look across our firm, today we have $50 billion of data centers that we own or are building, another $50 billion pipeline behind that. What's driving that is AI. This revolution is driving demand like we've never seen. And what that's translated to is an 11-fold increase in demand for data centers in the US over only the last 5 years. We think we're still in the early stages of this because, as you said, the big technology companies are telling us that they're going to spend $1 trillion on their digital infrastructure over the next 5 years. A lot of that's going to go into data centers.
Can you believe how big that is? Like they're saying in 5 years, companies collectively are going to spend over $1 trillion, and people cannot grasp how large $1 trillion is. But that means everybody is moving in that space, and we have the opportunity to become fractionalized owners of the data storage units inside those big centers. What say you, Travis?
Data centers are the new oil rush. Data centers are the new oil rush. Everybody wanted to get in on oil back in the day. They wanted to own a part of an oil well. Today, it's the data centers. And, I had a friend of mine whose father, when we were in high school, that owned airspace. It was such an interesting thing. He was buying up airspace for cellular phone towers or cellular phones. And I never really understood, how does somebody own air? Like, where does it start? Where does it end? Right. And so we kind of would laugh about it. We're like, you're just buying air. Like what? He ended up making tens of millions of dollars because as these larger companies came in and they kind of created uniformity, if you will, amongst these different cell phone carriers, these guys that own the air made a lot of money. And in the same way, I look at this in a very similar fashion, right? It's where everything is going. The people that have a chance to be able to participate in these data centers at this stage, I mean, we're talking about a $495 billion industry right now that's projected to double in the next 2 years. They have such a significant opportunity to be able to capture, the demands, and that is exciting to me. So that's how I look at it. I think that up until now, the elites, these three companies we talk about, AWS, Google, they owned 80% of the market share. But what's happening is, if you remember back in the 80s, you had a telephone company that owns 80+% of the market share. The government stepped in and said, we believe that this is interfering with commerce, and they actually forced this company to break up. And as a result of that, all of these subsidiary companies were born, and it all of a sudden drove innovation. It drove competition. All kinds of new sectors were developed as a result of that. And I see that same thing happening right now. The decentralization of big data is happening right before our eyes. And we know how big decentralization can be, right? I mean, cryptocurrency is a result of people saying, listen, we are tired of, there's a saying, gold is God's money. Fiat currency is the government's money, and cryptocurrency is the people's money. Well, in that exact same way, you could look at the decentralization of big data, which is happening right now, and say the exact same thing. We're at that same forefront of where we were maybe a decade ago with cryptocurrency. And I think, Mike, that's what excites me the most. And the reason why I'm here is not just the demand, but then you have to say, okay, we understand the demand, but now let's look at the business model. And when we start getting into the decentralization and taking the power away from these billionaires and saying, listen, for the first time ever, you and I can now participate in this fractional ownership type of model. That's a huge deal. That's a huge deal. I mean, let me give you just an analogy real quickly here. Imagine, self-storage industry has been huge for the last 10 to 20 years now. I've been watching a lot of my friends that are investors get into self-storage, but it does take millions of dollars, and you've got to not only do the build out, but you've got to know what you're doing to run these things. But self-storage companies, at least here in Arizona, they're being built on every few miles, and within a few months of opening, they're at 100% capacity. So imagine if somebody came along and said, Mike, listen, I'm going to spend millions of dollars to build out a self-storage facility, state of the art. And not only that, but we're going to start filling up all of these units. And here's the deal. Here's what I'd love to do. I'm going to let you just buy one of the units in the storage facility, or two, or however many you want to buy. You don't have to worry about all the big overhead. You don't have to worry about running it. We'll even help you, find the tenants. And that way you can now participate in the profitability. Would you do it?
Yeah.
That's exactly what's happening right now in this data storage space with the decentralization of big data. And that is exciting.
And we have, anybody listening is welcome to reach out to Travis Rye, but we have looked at different things. And the one company that we found, these guys are allowing us to buy these data center units within the towers, which are inside the centers, for like 15 grand. And I know the pricing is going to go up, and it's probably going to continue to go up because we have that first mover's advantage. And did you see what they released as their projections on what these things are paying out for what we would call occupancy? Like, so how it works is we buy the units, and then data is then stored on our units. So it's kind of like owning a storage facility. And as tenants fill those storage units, you're paid I don't know how you would call it. It's not a dividend. It's more of a royalty. I don't know. It's like just a rental payment, I guess. Mm-hmm. Did you see what I saw? Like, what did you see, and what were some of the projections? Because I don't want to, and again, we're not financial advisors. We're not guaranteeing income, none of that stuff. But these are things that this company's been putting out that publicly, that we're seeing for what we're putting into this thing. If we're putting this kind of money in any kind of like real estate properties, rental properties, it's not even remotely close. It just destroys what you could get with, what we're getting at this. So tell me a little bit about what you saw on that chart.
Well, if you look at I always look at the risk versus reward ratio of any opportunity, whether it's an investment opportunity, whatever the case might be. And there are some things that don't make sense right now to me. Earlier I said, if not this, then what? And let me give you some examples. So I love real estate. I think real estate is one of the most tangible investments, and historically speaking, it's always proven to, benefit those that acquire it. However, right now, if I were to go buy an investment property here in the United States, the average home is in between $400,000 and $500,000. It's going to take me 20% down to get into that home. So I'm looking at approximately $100,000 to get into that property. Interest rates right now, not only are values up, but interest rates are over 7% on an investment property. So by the time that I go rent out that property, and you look at the profitability that I'm making there, you're looking at, you might be making $1,000, $1,500 a month in profitability, depending on what your mortgage payment is. So now, if I have a property management company, I'm giving a third of that to the property management company. So I might make $20,000, $15,000, $20,000 when all is said and done on that property. Now, one could argue, yes, you get the appreciation of value longer term. But if I'm looking for cash flow, that's not necessarily the vehicle that I'm looking at right now, because I could go buy 5, 6, 7 servers. And when you look at the projections, and again, they're projections, not guarantees, even if I'm only at 20% occupancy, Mike, I can go make $15,000 per server per year, even at 20% occupancy. So $15,000 times 6 is a lot better than the 20,000 I'd be making a year annually on a, owning an investment property. And now we're talking about 6-figure type of cash flow over the next 5 to 7 years. And so for me, this was ultimately how I arrived at the decision that I did to invest in these servers, to buy one of these servers. Number one, market demand. Is it growing? Is it a fad, or is it going to continue to expand? Absolutely. There's no question it's exploding. Number two, does the business model make sense? Well, decentralization of big data to me is exciting. And I think that people are going to be very excited to align themselves with companies that are putting the power back into people's hands rather than giving Jeff Bezos more money. He doesn't need it. So that's number two. Then number three, if you understand 1 and 2, the question then becomes, well, do I believe that these servers will fill up? Like, do I really believe that we can hit occupancy of 20%, 30%, 50%? You're looking at 100% occupancy. That's almost $4,000 a month in revenue on one server. So do I believe that you can get there? The question to me isn't, can we fill up these servers? I think the biggest challenge will be, will we have enough servers to keep up with the demand, right? We're already 80% capacity in our first data center, and we're already getting ready to open our second, and that's after 3 or 4 months. So for me, when you start looking at other things that are out there, I could go buy a franchise right now that's, my friend has one of the top franchises in the country right now. He sells them for 50 grand. They're property management franchises. What do I get for that? I don't get any guarantees of income at all. I get a system. And then from there, I have to now go out and find customers that will hopefully generate me revenue. And along with that, overhead, employees, those type of things. So when I look at everything else that's out there right now, for $15,000 to be able to buy a server that has the potential to be able to generate $4,000 a month, and I can generate that revenue over the next potentially over the next 5 to 7 years, just an absolute no-brainer. When you look at the risk versus reward ratio here, it's just incredible. And even I look at worst case scenario and say, well, what if we don't get to 100%? What if we only get to 20%? Mike, would you spend $15,000 one time if you knew, even in the first year, it was going to take you the full year, first year, to get your initial investment back, but for the next 5 or 6 years, you get $15,000 a year over the next 5 or 6 years, 100% ROI year after year? Would you spend 15 grand one time to do that?
I'm not the sharpest knife in the drawer, but I think I would probably say yes to that. And I'm glad you brought that point up, because the other thing too is we're using low estimates of occupancy. Like Travis said a couple times about 20% occupancy. A couple podcasts ago, I had a gentleman on here who's actually a data center manager of a really large one for a massive utility company. And he was telling me that the demand for data storage is so big that they're actually companies are actually buying the data center contracts to be on the units before the buildings are completed from being built. Like, that's what's happening. There's another term he said called colo. It's like cooperative locations, that some of these data centers, like an Amazon, is using their data storage units so fast that they're now going like next door to a third parties and having to rent space off of them until they get their other locations built. Like, this is happening right now, which I think sealed that when I started to study that and figured that out, that pretty much sealed the deal for me. I mean, I knew this was already going in the right direction, and I could show probably an hour's worth of news clips of all the big players out there. Like, I found out in a bunch of news clips, I showed this a couple times too, was they said that commercial real estate is now the big hot thing for commercial real estate, is allowing people to build data centers on their commercial space. Like, that's what they're being used for. Like, and I've mentioned this on multiple podcasts I've been on. My church is on a 3-mile stretch. It used to be cornfield. It is now all data centers besides my church. Like, I'm not even kidding. There's literally like 25 to $50 billion worth of data centers lined up. They're building a giant water tower there, which I didn't know why it was being built there, because they have them in the small towns, and I couldn't figure that out. And it's for the cooling systems that have to go under the ground to cool all these things. Like, we are in such a sweet spot if people just understood this. And you touched on it, and hopefully I'm doing this podcast because it's more or less trying to wake people up for an alternative way to protect the money they already have and potentially get that money to start doing something for digital assets, creating, cash flow for them. Travis, we're about as long as we're actually over my time limit, what I normally go. Give me some closing words, what you think is going to happen here in the next 6 months to a year with what our projects are doing and where you see everything going. And then I'll wrap it up. Okay.
Yeah, I would say that data is the oil of the 21st century, and these servers, cloud hosting, is the combustion engine. And what I see is this just explosion that is taking place. I mentioned earlier that I think that the biggest challenge, and it's the challenge that Meta, AWS, Google, all of these companies are experiencing right now, is keeping up with the demand. When you understand that 85% of organizations and companies by 2025 will be cloud first, you understand just really how big the demand is. You could bring on one large enterprise level client that comes on board with us. And by the way, why would they come on board with us? Better terms, better pricing. Think about this. People don't realize that you are being used by these data companies, right? They are using your data and they are using you. Why? Because they're data mining all of that information that is stored on their servers. You don't own Facebook. You don't own Instagram. You don't own TikTok. You don't own Dropbox. They're data mining all of that, and they are making fortunes at your expense. So now you've got a company that comes along that not only gives you an opportunity to be able to own your own data, but they're also offering more favorable terms to the clients, in the sense that, listen, some of these companies that are out there that most of, that own the large majority of the market share, go read their terms. They can shut you down for any reason, anytime, for anything. Political affiliation, doesn't matter. So now you have a company that comes along that puts the power back into the people's hands. What do you think is going to happen? I mean, Mike, we don't have to beat out Meta to be successful. We don't have to beat out AWS. We just need to carve out a tiny little sliver of that $495 billion a year industry. And if we do that, we will literally have to go build dozens of data centers over the next couple of years just to even keep up with the demand. So for me, the reason why I'm already sitting inside of that data center with my equipment positioned and ready to go is because I understand this demand and I want to be right in front of all of it. And I believe that these companies, now that they're going to have more choices, these businesses that are out there, entrepreneurs, even little ones like you and I, all the way up to large companies, now that there's more options for them, they're going to start to look for better terms, look for better pricing, and they're going to look for scenarios where, hey, I would rather do business with these guys than maybe a billionaire like Jeff Bezos. And that is something that excites me. And I believe that is going to lead to these servers filling up very, very quickly. I have very high expectations, and I'm excited to be in this space.
Outstanding. Great closer. We're going to leave it at that because that was fantastic. If anybody has any interest in any of the stuff that we covered today, you can always reach out to Travis, myself, or whoever shared this with you, and we can kind of point you in the right direction so you can make an educated decision based on the facts, the information that we have out there. So thanks again, guys or ladies, everybody, for listening to the podcast today, and we'll see you on the next one. Thanks.